Asian stocks rose while the dollar firmed as expectations the Federal Reserve was close to cutting interest rates faded. Yesterday's U.S. manufacturing data grew for the first time in 1.5 years in March as production rebounded sharply and new orders increased, highlighting the strength of the economy and casting doubts on the timing of Fed rate cuts. Meanwhile, overnight, the S&P 500 kicked off the first session of the second quarter on a quiet note, weighed by worries over the timing of interest rate cuts. In commodities, Brent crude is up 0.3%, aided by signs of improved demand and rising Middle East tension. To give us more perspective on the markets, we are joined by Martin Smith, who is a portfolio manager at Anchor Capital. Martin, thank you so much for your time. I mean, last week I was having a conversation with other analysts wrapping up the first quarter of the trading year, if we want to call it that. But how have we kicked off Q2 for this particular time?
So it looks like we're getting a little bit of consolidation in US markets, especially given the first quarter that we had. When we look towards kind of emerging markets, South Africa and China, we're seeing a little bit more appetite, kind of coming through. So that's hopefully positive for us. But it is still quite early in the quarter, and I think we've got a long way to go. So let's keep an eye on it. But hopefully we see some nice flows into the JSE post this quarter when we speak again in 3 months' time.
If you had to look at some of the themes that dominated markets in that first quarter, what were they for you? And do you believe those themes will probably be in there somewhere for the second quarter?
Yeah, I think so, because I think the two big ones were that US growth continues to surprise on the upside, and that's looking very positive. The other one is around interest rates in the US. And you mentioned it at the beginning of the show, where expectations have changed. And it's not just expectations of number of cuts, also when. I think the market was expecting as many as 6 cuts at the beginning of the year, starting in March. Now it looks like there's a 50% chance of cuts starting in June, and we'll probably get 3, up to about 1.5%. So that's been moving quite a lot, and I think that'll continue into the second, third, and probably fourth quarter of this year. And the other one that dominated was AI and Bitcoin. So it's going to be interesting to see if the more speculative end of the market continues to catch a bid, or if you see a little bit of weakness there.
I mean, given what you just said about the U.S. economy, I mean, we got the CPI data, we had the PPI, we had the core PCE. If you had to put all of that together, how does that inform your view around what is actually going on in the U.S. economy?
I think the U.S. economy is in very good shape, is kind of the synopsis of all of those pieces of data. Things are looking decent. The consumer, which is about 60% of the U.S. economy, is in good shape. It just depends on how things kind of pan out over the rest of the year, while we have this higher for longer rhetoric from the Fed when it comes to interest rates and how the economy handles that. So we'll go data point by data point like we have been over the last 18 months. But for now, U.S. economy and U.S. consumer looks to be in pretty good shape. So
with that said then, I mean, I have to bring to your attention some of Jay Powell's comments. Back in 2022, when he was asked about, inflation, he said it will require pain in order to deal with it. In 2024, he says it will require time. So if we've just said the U.S. economy is strong, does the Fed need to cut?
I mean, that's the argument, right? You've got inflation being a little bit sticky. You've got a U.S. economy that is very strong. You've got a labor market that continues to be a little hot. So you've got all the things that are there showing you that you maybe can be a little bit patient with interest rates. And that's probably what the Fed are doing. They're waiting for that last stubborn bit to get below that 2% target of theirs before they start cutting. So I think that kind of informs their decision to be a bit patient and allows them to be patient, because you don't have this crazy pain that you've seen in previous cycles, because again, the economy seems to be holding up relatively okay.
So while we wait on the Fed's patience, or waiting for them to run through the data, are there sectors that excite you, whether it's locally or abroad?
So I'm maybe a bit optimistic, but I'm hoping to see some nice positive movement out of China, as well as the JSE kind of in the second half of this year. And you look at valuations on both markets, it's very, very undemanding. But what you need to see specifically out of China is for it to get out of first gear, to see some real nice data points come through, and also for sentiment to change. I mean, you've had quite a bit of negative sentiment, both towards our stocks locally and kind of abroad. Everything's been US focused, dollar focused, and hopefully we can get a little bit more appetite towards emerging markets. And we can see quite a nice bit of return out of those places should we see sentiment and a little bit of growth kind of move in the right direction.
Speaking of moving in the right direction, let's hone in on China. We had the manufacturing figures, that activity seemingly looking like it's speeding up as business confidence is also hitting a high. Are they moving in the right direction? Is this the kind of recovery we were looking for that we didn't get?
So, I mean, it is only one data point, and it was a very, very, very marginal beat. But just the bit of activity that you saw on the kind of upper end of that section was now a market that's moving nicely in the green over the last kind of 2 trading sessions. So it just shows you how suppressed that market is. You just need a little bit of positive data and continued positive data, because you've seen bits of it over the last 12 months. You had a very good GDP number come out about 6 to 8 months ago. But you need some sustained numbers that are looking positive. And I think you can see this market move very, very quickly in the right direction because, again, of how suppressed it is. So just one small beat in this number yesterday has seen the market up there about 2%. So hopefully it continues.
All right, let's leave it there. Thank you so much for your time. That is, of course, Martin Smith, who is a portfolio manager at Anchor Capital, giving us his perspective on the markets. And we also have a lot of Fed speak happening this week. We also have data coming out of the US. So we'll be analyzing all of that as the days unfold for you. But we're going to take a quick break. When we come back, we'll have more news for you. So stay tuned.